Good morning, guys, and welcome to this week's Money Market Update. I don't want to talk about the markets this morning because it's been a brutal couple of weeks. Let's talk about some positive things and how you can take advantage of what's going on and really build your wealth over time. And one of the biggest mistakes that people make when we get into a bear market is just simply selling great quality businesses. And when we see many of the great investors talk in podcasts and interviews and things like that, what they talk about most often is the great companies they own that ultimately they sold that they wish they had have kept. Now, right now, we've got a period in time where you may have bought some shares in 2020, maybe in 2021, and the share valuation has gone down. People think that there's something wrong with the business. In many cases, there's nothing wrong with the business. In many cases, your best bet is to stay with that business and not sell out. Because let me tell you this, it only takes one or two businesses in your investing lifetime for you to make a fortune and get very, very wealthy. Let's assume you own 7 or 8 companies in your portfolio, and only 2 of them rise in value 10x, 20x over the next 10 or 15 years. It doesn't really matter what happens to the other businesses. They can do average, they can go down, they can go up, but if you only have a couple of those businesses go up 15 or 20x or 30x in that period, you can make an absolute fortune. But you know, the problem is, most people don't own them long enough to actually get that 15, 20x, 30x. Just imagine if you had bought Amazon back in 2003 and you still owned it today. But the problem is, most people don't own businesses for that long. They just can't bring themselves to sit on their ass for long periods of time. I encourage you to own businesses for long periods and think about them as owners. Right now, yes, it feels terrible to have your share portfolio go down, but focus on owning businesses for long periods. That's where the money is. That is going to be a beautiful sunrise this morning. You know the deal. The only way share prices can create a bottom and rally is if we actually see inflation start to come down. I think inflation will start to come down in the second half of the year, and I think it'll come down pretty quickly. But the big thing is, it's not going to go back to 2 or 3%. Inflation, in my opinion, will come down, but it will likely come down to maybe 4 or 5% and stay around that level. The question then is, can financial markets continue to rally higher off that bottom with interest rates going up? But in the second half of this year, I think inflation will come down. So you get a lot of these new millennials come into the markets in 2020 and 2021, and I think back to when I first started investing and got to think it through a little bit, because back in 2020, when tens of millions of new investors came into the market, there was no sports betting, everyone was stuck at home, there was nothing to do, so stock market was going up, some people were out of jobs. Why not enter the stock market and start placing some positions and see if we can make some money? So they're buying crypto, and I remember when I started many years ago, I didn't want to buy the boring businesses like BHP and Rio Tinto and ANZ Bank and these types of companies. I wanted to buy the sexy businesses. I wanted to buy the businesses that were going up. And of course, in recent weeks, we've seen some serious capitulation in the crypto market and in many of the companies that a lot of these novice retail investors were buying. And that has this cascading effect across the market. So whilst the volatility is justified because of the fact inflation is high and interest rates are going up and there's a changing of the tide. And this is going to take probably 12 to 18 months to work its way through. So you need to be very patient. It's not going to be a V-shaped recovery like we saw in 2020 when the market went down and it went straight back up again. This is going to be more like a W. But what we're seeing is You don't learn to be an investor in good times. You learn to be an investor in challenging times, in bear markets. That's when you really learn to be a great investor, because you discover things that you didn't realize. You discover things about the market and about the participants that drives prices. And what we've seen in recent weeks is all of these retail investors that bought all of these businesses like AMC and Tesla and the sexy companies, Twilio, and even businesses like Twitter, etc. Because they're the sexy businesses that their future is bright and they're the future and they're the companies we want to own. A lot of those businesses weren't making money. A lot of those businesses had no free cash flow. They had low returns on invested capital, high PE ratios. And of course, the novice retail investor is not focusing on those things. They don't understand it. What they just want to focus on is making money. And in 2020 and 21, they were making some money. And when the market starts to initially fall, they don't sell because they're thinking, well, it'll come back a little bit, but then it'll go back up. So they sit and hold and they wait. And then the market really starts to accelerate lower. And it's not until it starts to really capitulate they shit themselves. And what happens is they sell, and they sell everything, and they capitulate and get out because they've got no concept of the company. They've got no concept of being an owner of a business. They've just got the speculator's mindset of making money. And that's what I was like when I first started. But those of you that own good quality businesses and you're focusing on those companies, your portfolio sucks right now from the valuation perspective, but who cares what someone's willing to pay you for your shares today? Because what you want to know is what they're willing to pay in 3 to 5 years from now. But the novice new retail investor in the last couple of years that essentially in the last few weeks has been wiped out. They're the ones that will walk around going, oh yes, the share market took me out in the last bear market. No, it didn't. The share market never takes anybody out. Unless you're using leverage. Don't ever walk around going, oh, the share market took me out. You sold out. You pressed the button and got out. And that's what's happening to a lot of retail investors. If you're pressing buttons and getting out of positions now, there's a high chance you don't understand the businesses you own, and you bought the wrong businesses to start with, and you bought them at very lofty valuations, and you deserve to have your ass kicked. I'm not going to sugarcoat things. I'm here with my clients to help you make money. And I'm here to help my clients make money, but I'd like you to make money too. But you've got to do it with a business owner's cap on. Think about it. It's no different to a business listed off the share market as onto the share market. There's absolutely no difference. So it's going to be a rocky few weeks and months ahead. Inflation will come down. The market will bottom. We'll get some rallies from here and there. But until inflation comes down and we have the financial markets globally start to normalize with higher interest rates and start to come to terms with that, inflation will come down. It will settle down about 4 or 5% for a little while, I suspect, and then we will likely see it come down further. But that's probably going to take some time. It may take until the end of 2023. But we're not in the financial markets. If you're putting your money into the financial markets for 12 months or 18 months and that's all you can bear, forget it. Don't invest in real estate. Don't invest in the share market. Don't invest in anything. Just leave your money in the bank and it'll erode with inflation by about 5 or 6% in the next 12 months. You've got to have a longer term mindset. That is where the real wealth is made. Have a great weekend, guys. I'll see you next week.